Hey everyone, Tom Scully here with Real Estate Talk, and this is the series called Documents Decoded. Now what I'm going to do is I'm going to have a bunch of these small videos. They're going to break down in absolute plain English essentially the legalese that you'll see in the most common residential real estate transaction forms in Ontario. Now Toronto might have something a little bit different in the GTA, but I hope you find these forms useful so that you understand exactly what you're signing. Now of course every transaction is a little bit unique. So as a disclaimer, I always say, make sure you chat with your real estate representative so that they can bring you through these documents as well. But this is a good secondary resource. I hope you find it informative. And if there's any documents that I don't cover that you would like to see broken down in plain English, let me know in the comments below. Let's take a look at these and I hope you find them useful. Take care. Hey everyone, welcome to Documents Decoded, a subsection of Real Estate Talk with myself, Tom Scully. And today we're going through the OREA Form 100, the big one, also known as the offer or the agreement of purchase and sale. So this document we're going through today, we're going to put it in plain English. This is the most important document, in my opinion, in the real estate process. And this is the standard form that you'll see across almost the entire province. There is some slight regional adjustments, like the GTA has some slight adjustments, but the content here is really important to know. So please, stay tuned. I hope you find it informative. And remember, when you're signing the end of this document, this is signing under seal. This is a legal document. So it's important to understand exactly what this is, what it means, and what it means to you in your real estate process. So let's break this Form 100 down in plain English. And if you have any other questions on it, please let me know in the comments down below and I will reply to you. Other than that, I'm gonna do some screen sharing. You're gonna see what's on my desktop and I'll do some little anecdotal information as well. So looking at here, OREA Form 100, this is the most up-to-date 2025 version of the form. So this is the form that you'll see with most things. The one thing you will not see when you see this form are all these red letters that we have in here. This is what we have for educational purposes. It's called the red letter forms, and it helps also describe it basically in plain English. And if you do want to see one of these, you can ask your real estate professional and they will have that available to them through the OREA website. So when we say the who, we're looking at this form right here. This will show you, of course, who's doing it, who's buying, the seller, the property, the address, the legal description of that. Pretty straightforward. This describes exactly who's involved in the legal transaction and describes what they're buying. Now for the what, of course, that's purchase price and the deposit. Now, as far as a deposit, as it states here, a buyer typically submits a deposit on the purchase of the property, demonstrates the buyer's sincerity and good faith in the purchase transaction. When a deposit is to be delivered, it can vary by the discretion of the buyer to be accepted or negotiated by the seller. Now, this is a big negotiation piece, so when you are conversing about a purchase as a buyer with your buyer representation, this is obviously a big conversation we have with our clients. How much do you give? When do you give it? Is there multiple increments, et cetera, et cetera? The situational position here, and that needs to be described in detail with your buyers and your representatives, and it is a big piece of the buying process. Now you'll see the options are herewith, upon acceptance, or as otherwise described in the agreement. So herewith means literally kind of cash in hand, checks ready to go as I give over this offer. It sometimes happens these days, not as common as it was before, because most things are now upon acceptance. So if the offer is accepted, then the buyer will produce, the deposit ready to go. Most likely in a certified check or bank draft, but sometimes cash is used really rarely in electronic transfer, depending on the size of the deposit. Now that usually is supposed to happen within 24 business hours of the document being signed and confirmed. But sometimes there are things that come about. Now I would have a conversation with your representation, because even though the deposit of course is in good faith and needed for the process, it doesn't mean that the deal is dead if the deposit doesn't get handed over. There's a lot more to that later on another episode maybe. And then it says underneath here, the Schedule A. So the buyer agrees to pay the balance as more particularly set out in Schedule A attached. Now Schedule A is a part of the document we'll see at the very end, and that is basically where you put your conditions and whatnot and all your clauses, and it will describe the way that the money is being transferred from lawyer to lawyer essentially. Now going into the next, this is where we start getting into some of the warranties, and we're getting into some of the framework in which your representation works on your best behalf. And there's 29 pre-printed clauses in this document. It's a long document, but it's important. But a lot of these clauses are essentially frameworks that allow the representation that you have, including your lawyers or mortgage agents, and your representation from your buyers and your sellers. This gives the framework for them to work within. So there's a lot of legal information here, but what I'm going to show you is basically just as the rules that are put in place and how we are able to conduct on your best interest. But the first thing we see is the irrevocability and the completion date. This is the when portion. So irrevocability, essentially, the party submitting the offer to the other side agrees to allow the other side until this time and date to consider and accept the offer. The submitting party is not permitted to withdraw the offer prior to that time. The seal beside their signature shows that the submitting party has received something of value for this irrevocable offer. And we'll get to that seal in a minute, but the irrevocability is very important. So I have some clients sometimes that say, hey, can we put offers in on multiple homes? I would not recommend that. If you put, now, while it's kind of a gray area and not illegal, you're acting in bad faith. And at the same time, if you happen to get multiple properties, now what? Now you are on the line for multiple properties, especially if they're firm deals. Do not do this. Only work with one offer at a time. It works in good faith. At the same time, it's going to save you a lot of headaches. So I always recommend, and I strongly suggest to anybody out there, you're only working with one offer at a time. But to each their own. I'm not to tell you anything past that. I'm just going to go through the rest of this document. But the irrevocability is pretty straightforward. It's delivered by typically the buyer first, sometimes the seller, and it shows by what date and what time that offer is good until. So the offer is good until then. When you hand that over, when that is signed and handed over to the opposite side, that offer can't be returned. They can decline it, sure, but if they decide to take the entire time, they're welcome to do so. And that's the amount of time they have to get in there. It can also be a piece where you see what's called bully offers. You have short irrevocabilities with decent prices, hoping to push somebody because the offer is only good for so long to try to take an offer. Strategy works sometimes, depends on the situation, depends on the market. Again, have that conversation with your representation. Now, completion date. This is another thing that goes into the negotiation part. You know, depending on the property, every property is a little bit different. Your completion date, it's going to be different. So this is essentially the closing day that everybody says. The completion date is the closing day. So it says this agreement shall be completed by no later than 6 p.m. on et cetera, a day. Upon completion, the vacant possession of this property shall be given to the buyer unless otherwise provided by this agreement. Some things about the completion date, while it's in here, it can be amended if both parties agree, as most anything can, but your completion date will go here. Sometimes you will see on the completion date, it'll, depending on the strategy, it can be left essentially open depending on what the seller needs. But again, talk about that with your representation. Completion date is your closing date. Number 3, notices. So this is a lot of information that basically states the representation that you have as a buyer and seller are able to work on your best interest by sending each other notices that's outlined in the structure there. As you see with the red letters, says under the agreement, there will be requirements to deliver notices to the other side. This provision highlights various methods that would be available to deliver notices. Now, the way that we typically do it is usually each board has an internal communication system that we use in Windsor, Essex. It's called Touchbase. Emails, phone calls, all pretty standard forms. But notices basically allows that framework for us to work in for the agreement. Chattels and fixtures and rental items. Always big pieces for the conversation. The difference between chattels and fixtures, hopefully you know that now. If not, I will be creating a video on it. There's an old phrase that a lot of people use: if it's screwed and glued, it's a fixture. If it's not, it's a chattel. But here is where you want to be incredibly descriptive in your chattels and your fixtures. So for chattels included, again, those are things that you're going to be including in the deal. Very commonly, we'll see that people will include, of course, appliances or lawnmowers and et cetera, et cetera. What I suggest to any buyers is when you put those pieces of information out, you don't just put refrigerator. So try to get, the best thing to do is a serial number, but at least make and model, right? You want to get make and model in there so, there is no convolution at the end saying, well, you just said fridge. There's a fridge, but it's not the fridge that you saw in the listing or not the fridge that you saw when you walked through the home. So be very detailed in your chattels, but those are essentially the pieces of the home that's included in the sale. There doesn't have to be chattels included, but oftentimes there are. Now with fixtures, those are things that are always included. Again, screwed and glued, EV chargers, chandeliers, wall sconces. Mirrors are not included in that. Just as a heads up, bathroom mirrors are not supposed to be included in that. But sometimes someone has a family heirloom that they like to have excluded. So if they would like to exclude something that's supposed to be included, that'll be underneath fixtures. Rental items, number 6. This is growing to be obviously a much more common situation that we see these days. HVAC, water heaters. You'll sometimes see other things that are attached to the house that are rented. These are things that are going to be passed on from the title owner of one home to the person that's taking it on next. These are fixtures that are being rented by the current owner that are being transferred over to the new owner. Just as a very good note, if you don't list the rental items in here, and there is no rental items to be assumed, then the buyer of the home may be able to liably go after the seller if they are now taking over leases that essentially they didn't know about. So please be very descriptive with your representation, exactly every single thing that is rented on that form, because if it's not disclosed properly and in detail, there may be some problems that occur. Next, of course, the government, number 7, they get their HST portion. Now, there are 2 different variations that happen here. You'll see the options are included in or in addition to. Right, so there's 2 options: included in addition to. Any resale home in Ontario, I won't say for Canada because I can't be 100% sure, but I'm pretty sure it's the whole country. But definitely in Ontario, resale homes, the HST is included in the sale price. You essentially pay once for HST on a home, and that is the first time you buy it. So any new builds, you'll see in addition to. Any resale, you'll see included in. If you have a resale property that you're purchasing and the agent accidentally puts in addition to, please note that, because you may be liable to pay extra fees on top of that. Of course, you'd be paying land transfer taxes, but that's a whole different situation. This is strictly HST. So number 8, title search, and this is where we start getting into some of the legal portion for giving the framework for your representation on the legal side to work within. The title search basically states that you have until this time for the lawyer to make sure that the title is clean, free of all liens and encumbrances. Now, this is variable, of course, depending on when your closing date is. Typically, you want to attend at least 10 or 7 days before your closing date is there, and that's business days. Some people might have it a little bit shorter, but you want to make sure that gets done with plenty of time before close. Sometimes it gets missed, and it goes right up until close. Can lawyers do it just before close? Yes, but let's remove all possible situations with that and get it done right away. So make sure you have given your legal team enough time by putting a title search date in there that's effective. Future use, this is one that people discuss often as well. If it's a pretty standard residential transaction, it's going to be zoned residential, purchased for the purpose of residential, but it's not uncommon for people to want to work from home or have a commercial zone or multi-use. If it's a duplex, there's a lot of options here, but if you're purchasing a home for a particular use, it has to be available for that use. Now, there may be conditions that you want to put later in the schedule that gives you a condition to be able to see if you can rezone for your certain purposes. But the long and short of this particular pre-printed clause is to set forth that you're entitled to be sure that the use of the property is what you're intended to buy it for. So number 10, title. Obviously, a very important part of buying a property is a clean title, with the few exceptions that are, written into law. Paragraph sets out that the buyer is entitled to good title, subject to a number of items. This includes having the title subject to a minor utility easement such as gas, water, hydro, and so on. The buyer also have to accept restrictive covenants if they are complied with. Now, sometimes you'll have restrictive covenants placed on the property from the municipalities, and unfortunately, when you buy a house, that will be, you can't do anything about that. If they are there and complied with, and they're done properly, or easements are done properly, they're going to be going with the title, and you will have to comply with those. But this sets forth, essentially, there's an entire paragraph set forth to put in the legal framework in which your legal team, your lawyer representation, will be able to search for the title, ensure it's clean, and you can't essentially transfer a title that isn't clean over to a new buyer. So they will look at this in the title search time frame to be sure that your home, the property you're purchasing, is clean and available for you to purchase. Number 11, which is closing arrangements. So this again just provides essentially framework for your legal team to work within for the closing documentation between both parties. So you'll see a lot of pieces here, a lot of legalese in the chapters and the legal registrations, Electronic Registrations Act, etc., etc. But the long and short of it is most transactions in Ontario are completed electronically. The following paragraph sets out how this is to be accomplished. A lot of words, that's what lawyers are paid for, and that's why they make the big bucks. There's a lot of words they can decipher on a regular basis. So number 12, documents and discharge. This is another very wordy paragraph that's all about the legal framework in which the lawyers work within, but it also has to do a little bit with mortgages, of course, and with any of the documentation the seller should be providing the buyer. So this states that, the seller has delivered all the documents to the buyer pertinent to the home. That includes, any deeds or any surveys that might be going along with it. Now, most of the time, this is already on the title, and the lawyers will sort this out themselves. This also gives the framework in which they can discharge any of the mortgages. Now, Class A mortgages or traditional mortgages are pretty straightforward. The lawyers will have them paid out, of course, and they'll discuss it on their side with the mortgage representation. But sometimes you'll have Class B or C lenders in which the mortgage may not be discharged on the day, where they'll have to have a framework in which they hold back a certain amount of money to make sure that everything is covered for the buyer of the property coming in. But again, your lawyer will discuss that more with you. This just sets the framework with them to be able to work within to provide you the rest of the transaction. Number 13 and 14 essentially are both warranties by the seller to the buyer, the inspection one and the insurance one. So 13 under inspection basically states that the buyer has been given every opportunity to see the property physically if they wanted to, virtual if they wanted to. They were given the opportunity to have a home inspection. This is a clause to protect the seller a little bit, but also makes sure that the seller is providing the buyer the option to do all of these things. The long and short of this is they want to make sure that any buyer has no recourse saying, well, I never got to see the property. You can't say that if this clause is inside here. Now, if that's ever struck out by a buyer or a seller, that is a good notion you want to be wary of, because this pre-printed clause is important, and that basically states that you understand what property you're buying, you understand the condition it's in. As far as insurance is considered, with number 14, this is a legal clause that states the seller shall maintain insurance on the home throughout the entirety of the process, right up until the closing date in which transitions over to the buyer. Now, anything that happens from the firmed sale date of that home up until the closing date, that is the responsibility of the seller. That's where this comes in. So if you come into a situation where you buy a house, it's a firm deal, and let's say they have a big raging party, they're liable for all damage to that home. And on top of that, you have the ability to, if the damage is substantial, to walk away from that deal potentially, or you can keep the deal, keep the home, and you can reap all the benefits of the insurance claim. Again, talk about that with your representation, but that is the Coles notes of the insurance clause. Number 15 is Planning Act. Pretty straightforward one. It's just stating that the property you're purchasing falls within the regulatory guidelines of the regional, municipal, or county-wide planning act that's put into place. You can't purchase a property that doesn't fall into the legal plan of the actual region. Document preparation. Again, this is another piece where that's giving the framework for your legal team to work within. It says the deed is prepared except for the land transfer tax affidavit at the expense of the seller, and any mortgage to be given back at the expense of the buyer. So this is the documents that you'll have on close. Both the sellers and the buyers have their closing documents with their legal teams. This phrase here essentially gives the framework for them to prepare these documents. Sometimes the buyers will have to pay back any prorogue taxes. Sometimes the sellers will have to, of course, pay for any expenses on their side that's a little bit more. As far as residency is concerned, which is number 17, this is again a legal framework discussing the nationality of the seller. If you have a non-Canadian seller, this allows them to obviously collect the income tax, and the framework for the legal team to be able to, impose those restrictions on the sellers themselves for tax purposes. So number 18 we have is adjustments, which can kind of be put into 16, but they are obviously a little bit different. So in the documents that are prepared by your legal side, one of the big pieces is what they say is adjustments. So in a real estate transaction, there will be adjustments such as prorating the property taxes, meaning if these property taxes were prepaid by the seller, you'll have to pay them back, essentially, so you're paying the property taxes for the time you own the home. This clause lists the usual adjustments and provides that the buyer will be responsible on the day of closing. So this just basically discusses, again, puts together a framework for the legal side in which to work within to discuss the adjustments that the buyer will be responsible for on the day of closing. Next, number 19. I know this is a long document. It is what it is. Number 19, we have a property assessment. So the property may be evaluated and reassessed on an annual basis. It may be. Rarely is, but it may be. The buyer and seller agree not to hold the real estate salespeople responsible when a change takes place. This is a pre-printed clause that protects the real estate transaction or the real estate representation on both sides, stating, you have an impact assessment, you know what your property taxes are. Now, we don't know when those are reassessed. We don't get heads up on that. We have absolutely no idea. So typically when we sell a property, we do it with the most recent tax sheet that we possibly can. And that's what's supposed to happen. You see the recent taxes, you go forward in the transaction. If that changes, unfortunately, we didn't know it was going to change, so that is going to be just the way it goes. The buyer has to assume those changes and go forward. Now, a good note here, if you are buying a new home and it hasn't been built yet, please understand those property taxes are going to change as soon as the home is built, usually by quite a bit. New builds are obviously going to be, evaluated based on the price of the home, and if you're paying premium dollar on the price of a home, then that is essentially where they're going to be assessed at. So your taxes on new builds are usually quite high, but you get the trade-off of having a brand new home, which is always a nice thing to have as well. Number 20 is time limits, and this is pretty straightforward. Dates and times are important and must be adhered to, meaning that the closing date is the closing date. The irrevocable date is the irrevocable date. However, all those things can be amended if both sides agree. Special to note, if you have a firm deal and you have a closing date you'd like to shift, say you're a buyer, you want to shift that because you're selling your house, the seller does not have to agree to that. Now, a lot of times it happens that they do get shifted around and both sides try to agree to work on, a mutually beneficial time and date, but both sides don't have to agree, just as a note. So don't assume that just because you're asking for an amendment to anything, that it has to be agreed upon by the opposite party. It does not. Usually works in their benefit anyways, but they don't have to essentially do it. Number 21, tender. Each side must be able to demonstrate that they are ready, willing, and able to complete the transaction. For the buyer, generally, they must be able to produce the money to close, and for the seller, it's generally to produce the deed and the keys. Sometimes it comes under tender because that's pretty self-explanatory. We need to make sure that the mental health and understanding of both seller and buyer are there as well. If there is sometimes an elderly client or somebody who isn't capable of making decisions on their own, they usually have representation that is allowed to legally work on their behalf. However, there has been cases in history here where the seller or the buyer had no idea essentially what they were purchasing, and they were able to prove that. So just make sure that everybody in this transaction is of sound mind, sound body, consciousness, and they're able to do the tendering of the legal agreement. Number 22, the Family Law Act is a very important one. So the Family Law Act, which was put together in 1990, states that if you are a married couple, then just because your name is not on the title doesn't mean that you have no say in the sale or the purchase of the property, the sale of the property. If you are in a relationship and your name isn't on title, you must sign the spousal consent that we'll see underneath, because even though you're not on title, you are part of that marriage. You are part of the obligation to the sale of the property. Family Law Act number 22, super important for that. UFFI. So this is a disclosure. So UFFI is a type of formaldehyde insulation that we don't use anymore due to its toxic and carcinogenic negative side effects. However, some homes a long time ago were built with that, but we haven't used it for quite some time. What this clause is stating is that the seller is not using UFFI in their home that they know of. Now, not everybody knows exactly what's in their walls, especially if you bought a house, you never ripped them down. You can't see through walls, because if you could, you'd be pretty rich, because you'd be a superhero. But UFFI clause number 23 states that there is no UFFI being used in the building that you know of. If it's provable that a seller sells a home or a property with UFFI and does not disclose it, even though they knew about it, they're liable for many things, including potentially a lawsuit, and on top of that, obviously the removal of it, and maybe even more. But that's more of a legal question to ask your lawyer. But the UFFI clause states that nobody knows that it's there, or it's just not there at all, or else it would have to be disclosed. Number 24, legal, accounting, environmental advice. This is a clause that protects the real estate agent, and something that's very good to note for buyers and sellers. Your real estate agent, unless they are certified under the bar exam, they're a certified financial advisor or whatever, they are just real estate agents. Their advice does not execute as legal advice in any other area other than the real estate transaction. That's it. So any information that we give you For instance, mine's always, hey, this is this. I suggest you get someone looking at that. If I see something, you should get a lawyer to discuss this with. Or if I see something in the foundation, I highly suggest, which I always do, to have a home inspection. Past that, we do not give formal advice on anything. That is a clause that protects the real estate agents, so that if you say, hey, my agent said X, Y, Z, this states they are not experts in that field. Their information cannot be held against them. It goes to say that if you are receiving a lot of information from a real estate agent who is not certified in any of these things, please take that into account. Number 25, consumer reports. This states that during the transaction, some consumer reports will be pulled to make sure the transaction can be processed. This is done by the legal side. So the following paragraph notifies the buyer that a personal or credit check may be obtained and referred to the property. Last couple ones here, we have an agreement in writing. Pretty straightforward here. Basically just states that if there is a conflict or discrepancy in any of these pre-printed clauses of anything that has been added to the agreement, and that would be in the Schedule A, that anything in the Schedule A then will take precedent or supersede the preset clauses. So in the Schedule A, if you have more information that pertains to anything of these preset clauses, whatever's in the schedule will supersede the preset clauses. Important to note, if you see a long Schedule A, especially things that are pertaining to certain things or the legal, the accounting, anything, that is going to supersede what is preset in these clauses here. Number 27 is the electronic signatures clause. This allows us to use electronic signatures in the process of this transaction. And number 28, time and date. So this is stating the time and the date that is being used in the transaction itself for irrevocability, closing, etc., etc. That is going to be the time and date that's pertaining to the geographical location of the property itself. So if you live 10 time zones away and you're buying a house in Windsor, Essex, the time and date will be for the one in Windsor, Essex, and that is the one they use. Successors and assigns, number 29, pre-printed clauses we hope we never use, but unfortunately it has to be stated because things do happen. If you are in a firm agreement and something happens and you happen to have an accident, someone passes away, unfortunately the heirs, executors, administrators, and successors, they are assigned this now property and they are binded to it. So hopefully nothing happens to anybody, but if you do, your heirs will be bound to the deal that you're creating. Now we're getting onto the part that's fun. So this piece here, you'll see a little black seal. It says underneath it, seal. These are legal seals, making this a legally bound document. Understand that very thoroughly so that when you do sign, you understand you're signing a legal document, and that document will be used in any court proceedings if need be. Buyers sign up here, sellers down here, spousal consent, as you see right there. That's for that other section we discussed before. And the most important piece that everybody loves is the confirmation of acceptance. So this part here, the confirmation of acceptance, does not get signed by either the buyer or the seller until everything is agreed upon and they are ready to accept the deal that's presented to them. Now it can be the buyer or the seller depending on if there's been any counters or if it's a traditional list and you just get it from the buyer and you sign off on it directly. So you'll see buyers here, sellers down there, and it'll say signature of seller or buyer right here, depending on who is accepting the deal. Because sometimes the deal gets countered by the seller to the buyer and the buyer accepts that. That is where you sign. Down here with the information of the brokerages, the listing brokerage, cooperating brokerage, the acknowledgements down here that you're signing, you acknowledge that you're signing, or you're acknowledging that you're receiving a signed copy of this as soon as possible. So that acknowledgement must be signed for us to send to our brokerages. Commission trust agreement is stating that both the listing brokerage and the cooperating brokerage have an agreement in place for the commission trust, and that they're allowing that the cooperating brokerage to receive that commission. Now, lastly, we have the Schedule A. And sometimes you'll see a Schedule B or a Schedule C depending on the length of the document. And a Schedule B is very common, especially if you have a listing brokerage where their trust account, where they hold all the deposits, is an interest-bearing trust account. So anytime any brokerage makes money off of a deal, even if it's pennies or cents like these interest-bearing trust accounts usually are, they have to disclose that money is being made on the money being held. So you'll sometimes see a Schedule B notifying that. So Schedule A, you're going to see the clauses, conditions, all the protections for the actual purchase itself. This is where if you have anything that supersedes the pre-printed area, that goes into here. This goes into here how the rest of the money is being transferred, any home inspections that you want, or anything for house to sell conditions, warranties on the property, warranties on the chattels, etc., etc. But you'll be signing and you will be initialing, and this is the schedule that gets attached to essentially the pre-made offer sheet that you find here. So I know it's been a long one. The APS Form 100, the offer is a very, very important document. Understand it thoroughly, go through it with your representation, both buyer and seller, and make sure before you sign anything, you have complete understanding of what you are signing. If you have any questions, don't sign. Don't sign until those questions are completely answered and you are comfortable with everything going forward. I hope this answers a lot of the questions. I hope it breaks down in plain English as to what is being showcased here. Again, there's a lot of legalese, but the majority of it is simply just framework in which people that you're representing, or that are representing you, are able to work within. A lot of legal documentation, but in the end, hopefully, as a buyer or a seller, both of you are happy and you come to terms with a very strong, sound, firm agreement, and the process can be as smooth as possible. If you have any questions, put them down in the comments section below. Other than that, if there's any other documents you want to see me do, you can also put that down in the old breadbasket. My name is Tom Scully. This has been Real Estate Talk, Documents Decoded, Form 100, the Agreement of Purchase and Sale.